Mr. Chairman, sorry I was absent until this point in time. I just have a very specific line of question here, Director Swagel. You know, your projections assume obviously the tax cuts expire, correct?
That's correct.
I think one of the real tragedies of that occurring is we're going to have an enormous disparity between C corporations, which represent about 5% of American businesses, and all the other pass-throughs. What I want to know in your projections, because having been a pass-through business myself, actually I've been part of a business of every different type of corporate structure. And quite honestly, during the tax reform of 2017, 2018, I got letters from the AICPA saying this is exactly what would happen, is that particularly large pass-through businesses, but this might happen with small pass-through businesses as well, they're not going to be able to compete with that huge disparity between C corps and pass-throughs. So a lot of them will convert, particularly the big ones will convert to C corp status, which is going to be a much larger, not only marginal, but effective tax rate. In your projections going out, do you take that in consideration?
It's an issue we've been struggling with because, you know, we've modeled current law, our projections are current law, and we've been trying to think exactly about this. If you're an S Corp, there's uncertainty about what's going to happen at the end of 25. To what extent will S corps make the switch, you know, now in advance of the, the expiration? So we have a little bit of that switching in our revenue modeling, but not the kind of full-fledged switching that you'd expect, say, in early 26.
I mean, would you agree with me? I mean, the rational choice for a business person, if you want to continue to compete, because let's face it, pass-throughs compete with the corporations at the entity level. Now, I know everything about double taxation, that type of thing, but I think it's about 2/3 of C corp business income is never taxed, correct? Are you aware of that figure?
I don't know offhand, but there's lots of income that's retained.
But a large, well, it's retained, but also a lot of C corps are owned by non-taxable, tax-exempt.
That's right.
So again, it's hard to get that figure, but somewhere between 2/3 and 3/4 of C corp income is never double taxed. So you're looking at an effective rate. We got it from JCT of 10% for large corporations, 14% for small C corps. And large pass-throughs are going to be up over 40%, aren't they?
No, that's right, because the lower corporate rate from the 2017 Act is permanent.
So a large pass-through is going to be paying a top marginal tax rate over 40%, competing against, whether it's a large or small C corp, somewhere with an effective tax rate of 10 to 14%. So the rational thing for a pass-through would be, I can't compete, I'm going to convert to a C corp status.
Yes, no, that's exactly right. And we've been trying to figure out when that, sort of that massive switch will happen, given the uncertainty about what's going to happen next year.
So one of the reasons I'm bringing this up is I'm trying to get a score on what I'm proposing, which would be to equalize the tax treatment between American businesses. In other words, tax all business income at the ownership level. That's what pass-throughs do. Trying to get that score is going to be difficult for me because we're not really reflecting what's actually going to happen if we let those tax cuts expire. So is there any way I can get some sense of what that number is going to be if there's a massive shift, which I believe there would be, from large pass-throughs, particular switching to C corps?
Okay, I'll tell you two things. So one is the formal estimate would come from JCT, just because that'd be a change in the tax code. We have an excellent tax analysis division, and we could come talk to you about how our revenue projections would change. It wouldn't be, the cost estimate that JCT would do, but we could talk you through how we would see it and what it would mean for revenue.
Okay, well, let's start with how you have accounted for that, because you've been thinking it through. You've made some provision for it.
Yep.
Let's take a look at that, and then what kind of work with me on that. I'd appreciate it.
Okay.
That's all I have, Mr. Chairman. Thank you.
Thanks.